points on the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in on February 25th, 2022. And the stock market just had the biggest day since the PPP loan. Yes, that's amazing. It is huge. Today was wild. It was literally a 6.6% top to bottom swing. You have not even seen that on January. Again, today's candle and across the board on a lot of names. It was absolutely wild. And yes, sadly, the buy the invasion ended up working, even though you got all those crazy headlines. And even though we are expecting more tomorrow, the market was able to close green, even though every other market in the world absolutely got demolished. So we got a lot to talk about. There is definitely more on the table for tomorrow. I have an outline for you. I'm going to give you the main reasoning why we saw this, what to expect, and then I got a couple plays that I'm looking at. So right off the bat, drop your thumbs up if you find this video helpful, and big shout out if you guys have been showing love and holding it down. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. But as far as what happened today, the moves that you saw, this top to bottom, this is a big sign of volatility. We've talked about it really not too long ago. That 6% is huge, but this was literally bigger than when the Fed was announcing their actions during the pandemic. I believe March 16th, 2020. This was a bigger top to bottom move. Again, if you don't remember back then, markets were down a lot, and then crazy news would come out, and then the market would rally like crazy. That was a big sign of volatility and kind of the times, but you saw that happen today, and the moves that you saw today in the pivot, it was literally bigger than the Fed in 2020, and then the day that they announced the PPP loan. So you may look at all the indexes. Today looks very green, but you can see here, we were really worried about 421. You gap down all the way to 411, even below those 415, 417 ranges that we talked about yesterday. So we were really in the gutter, but right from the cash open, everybody started buying it up. We were able to go from negative 3% to positive, and then right when Biden announced the more sanctions, which were pretty soft, we're going to talk, they say it is the biggest in the world. We're going to discuss it, but that was the go-ahead sign, and then the markets really bought the invasion. So what I'm trying to tell you, today was historic, but these top to bottom moves, these round trip massive losses to gains, all this points to is volatility. Now, we're going to talk a little bit about Russia, but just to keep it on the same point, if you want to know what's going to happen tomorrow, I just want you to think about a night out going drinking, okay? Today's move was huge. You could say the market was drunk, whatever it was, but today they were pounding back the SPY calls, whatever you want to call it, but tomorrow is either going to be a big hangover or we are going to really just rally, keep on drinking and have the same energy, and then we could really start to see how the market is digesting things. But if you're wondering why I'm coming up with this logic, let's just go back to the last time we were coming into lows, had a major flush out, and we're dealing with uncertainty. That was not too long ago, January 24th, and this was one of those big days, and then we waited till you got the Amazon earnings, if you remember all that, and even Tesla, the back and forth. But the next couple of days, there was some pretty big candles, and you kind of held these ranges. So essentially, the size of the candles here, we're really going to see a lot. If this is going to be a ferocious bounce like March or April, you will literally watch this same energy, and we will get a really, really big move on the upside. So that's what I'm going to be looking at for tomorrow. But coming back to what happened today, if you really want to understand the bounce and even everything that happened, we did announce more sanctions, and they were pretty big. The only reason why I say they were soft is simply we did not go to the extreme of doing anything with oil, commodities, or SWIFT, and the White House even recognized that, and they talked about it today. We'll talk about it here, but that's the only thing that we could say was soft. But essentially, the fact of the matter and why we bounced today, even though we added more sanctions, it wasn't enough to stop Russia from attacking Ukraine, but it was also enough to not allow this situation to stop pretty much the financial system. Again, any other actions besides what we did today, it probably would have had a lot more bigger direct and indirect consequences. So if you want to understand what happened today, here's just a little quick recap. Again, the Treasury has now sanctioned almost 80% of all of Russia's banking assets. The two big banks now, remember, a couple days ago, they did not sanction the bigger banks, but now Sberbank, I don't know, Sber, I don't know how to say it, but them and VTB, they got sanctioned, as well as three other banks right here, Oaktrite, Novacom, and Sovcom. I'm probably butchering all of them, but you know me, baby. But there was that, and then they went after the deputy and chairman of a lot of these banks, and these were the people that they sanctioned. So this is pretty much what they did today and what they're dubbing as the biggest sanctions ever, but it did leave out two big things that'll probably have a lot more consequences. So that is why we got a little bit of a bullish reaction, and if you want to understand it a lot better, we gave the analogy today. It's like getting into a fight. Usually the anticipation leading into a fight is a lot worse than the fight. If I said, meet me at the basketball court, you're probably going to be a lot more worried till you find out that I'm 5'6" and can't throw a punch. So keep that in mind, but to really understand it now, after we got the invasion and after we saw a lot of crazy videos and everything else, the known risk right now is better than the unknown risk. Essentially, if you're looking at Russia and Ukraine right now, there is a lot less unknown now that we've seen a good majority of it already play out. So essentially, if we could get over some of the bigger headlines and it doesn't get any worse or introduce more unknowns, this is essentially how the market goes from dealing with uncertainty to just dealing with it and being able to move on from there. So that could explain it, but like I'm saying here, we really need to see how this plays out, because if history is any guide, we're probably going to still get a lot of back and forth, and the ranges are going to be crazy. So to jump around a little bit, I'm going to get into the first pretty picture. Today was crazy. There's a lot of things at play. A lot of people are thinking ahead. You saw so many things get affected, but the first chart I want to show you, it is the WAN correlation to the VIX, and essentially it is hitting a 3-year low. So you might be surprised if I say this, but maybe it might be a time to start eyeing some China stock. In the middle of all of this volatility, in a weird way, China's currency has managed to be a safe haven in all of this. So keep your eye out for that. I'm telling you now, because I wouldn't be surprised to start hearing about this more in the coming weeks, especially if we do get over some of the uncertainty. So there was that. And then your second pretty picture to understand the scope of today, even though every market did bad and we did good, Russia was the one that really got clapped, and they were now the 5th largest one-day stock market drop ever. And as you could see, there's just not really too many that happened unless it was like really old. Again, the only other one was Argentina in 2019. That was 37%. Today, it was 33% for Russia. And again, even Hong Kong in 1987, this was a result of the United States flash crash, believe it or not. So today was big. Even though you see the market's doing a lot, chances are we are still going to have a little bit of a global market rehabilitation, not like the idiocracy kind, but we'll see what happens. But to come into this strategy and how we're going to be eyeing it, again, I want to be looking at certain key levels. I want to see the level of momentum and velocity we have, but we saw it today here, man. Some of these small plays and riding the wave until the uncertainty fades, it looks like it can be good until we really know what's clear cut. I am definitely shopping for the long term. We talked about it today, and I'm going to talk about it here in the plays too, but I'm keeping it small. I'm waiting a little bit because this will even apply with our butterflies. Again, they even got hooked up, even though they went down only 10-20% today. This is moving us in the direction of our target if you think about it, but now it is all about just riding this wave, and we'll see what the market does up until we get into the Fed, because essentially that is going to still be the main catalyst. So coming into the company news and events, the first thing here, we saw Alcoa get clapped during all of it, but this is probably one of the biggest pieces of news. Again, every single piece of news today was all about the sanctions, what the United Kingdom's doing, the EU, all of that, and then where Russia's attacking and all that. Literally, we did not get any other headlines. Everything we were talking about, inflation, Omicron, I don't even know, the Taliban, all of it. Literally most of the headlines, all Russia and that. But one thing that emerged out of this is what the White House had to say about the sanctions, and they they said that they avoided energy sanctions and they nodded to the impact that it would have on the global economic recovery. Essentially, they said they don't want to touch commodities or oil and they don't want to sanction Russia in that part simply because it could damage the global recovery and we pretty much need them. So pretty interesting take. It had an effect on a lot of companies as the situation moves forward, depending on if it gets better or worse. Like we talked about today, this is the primary thing to watch. I brought it up today. What I'm worried about with this whole situation, my worst case scenario, is that this leads to the price of oil shooting up, materials going crazy. It backs the Fed into a corner, forcing them to raise. But even besides that, it would be enough to start the second wave of inflation. So keep that in mind. That was the first piece mixed in with my opinion on there. Keep that in mind. But there was that. And then throughout the day, we got to hear from the Fed officials. You had Fed Daily and Fed Bostic. Both of them, they signaled that the March rate hike is still on track despite Ukraine. They talked about it. They said it could have an effect, but they said for now, nothing has really changed. So keep that in mind. If you weren't watching the Fed futures today, they actually chilled out up until we started rallying, and then they came down a little bit. But for the most part, people did definitely take their foot off the gas pedal as far as how many times the Fed is going to raise rates. So that was kind of bullish to a degree. Again, we're going to talk about this a lot over the next coming days. So keep that in mind. And then finally, the only other big headline that was really shocking today, the SEC is probing Elon and Kimball Musk over the November sales. So if you remember, Elon went on Twitter. He says, should I sell this stock? Well, his brother sold right before that, and they're now questioning whether or not he knew his brother was going to do the poll, and then he sold outside of a trading plan. Some people said this was old news. People have talked about it, so we'll see what happens, but it did hit today as breaking news, so keep your eye out for that. But that is all of the main news. As far as the rest of the week, I would love to say it's going to be straightforward, but it's all going to be about what happens here with any of the global events, and if the market is going to bounce and get over it, it will make it very clear, and you will see a face ripper rally. Otherwise, it's going to be a lot of volatility until the Fed, so I hope you're ready. But that is pretty much it, so let us get into the plays. So right off the bat, I got 3 different stacks that I'm looking at coming into today. The first play I did make a play on, and I am really liking it because I think I could explain it very clearly. So the first play I'm looking at, this is the 2 plays that I made today, but BNO, that is the USO of Brent crude. So instead of WTI crude and US oil companies, this is a ETF that is based upon or weighted upon contracts in Brent crude and the price of Brent crude oil. And why? Because it is different than WTI and anything related to Europe. You'll notice there is a premium on Brent. Now, why I'm liking this, we talked about it over the last few days. Remember, at the beginning of the year in general, oil was already doing good. So even if situations die down, it's not like some of the bullishness is going to go away. But now on top of it, if we do get any worst case scenario, I am pretty sure these are going to go crazy. And even without it, though, it is starting to look like the same trajectory. Again, last time they released anything from the SPR, you saw what happened, but we did get fooled a little bit with some of the headlines. So this is what I'm trying to tell you. Essentially, I like this play. I got it. You saw them go down today, but now think about this. Oil went up when things were going down over the last few months. Literally, oil was an outperformer. So now, at some point here, if the market goes up and we're watching it kind of chill out in the middle of all this volatility, back and forth, people are buying the news, and a lot of the moves are happening pre and post market, the outperformer is going to move opposite, but at one point they're going to match up. And eventually we are going to see a point where both of them start to go up together. And that right there, I think, is going to be the moment to even get a little bit more. So a little bit more stability in the back and forth would help. But essentially with BNO, same thing with Alcoa. This is exactly what I'm looking for. I went with 2 plays on them today. And what I'm going to wait for is let them do their thing. And if we start seeing the markets go up and these assets chill out because they've been on fire recently, I'm going to wait till the point till they start going up at the same time. And that will be our entry point. So as far as the play play for B&O, I grabbed a $33 call. I grabbed 3 of them at $2.10 for the October contracts. Again, I'm thinking out ahead. I am not expecting any of these to immediately hit, so I went with those. But essentially, once I find my matchup, I'm probably going to buy a lot of shares of B&O. I think it might be a little bit safer, but we got that play. Ended up dropping 23% after the whole fiasco today. Still not too bad. And then the second play, all the other premiums were expensive, so I went a little bit short term, and I even said it on stream. I want to eye around May or June with it, but I grabbed an Alcoa 110 call, the furthest one on the chain, and I bought, I think, 50 of them for about 11 cents. And you could see the last trade came through. That was only a 10% premium to the day before, after we woke up to all of the news today. And you could see this contract over the last couple days, it was actually going for double the price. So in a weird way, it was cheaper. The probabilities kind of died. Again, little amount of time, super far out the money. I think that's the reason why. But I said, hey, if anything goes crazy, I'll get a little bit of these. And then my idea was, if I lose on that play and they ended up holding up, I should be able to get a discount. And essentially, that is what happened. Most of the other May calls, you can get them at some cheaper prices. So we're going to see. But like I said, there's going to be a little bit of that volatility. I mean, here is a chart so you could see it. Markets were going down. All of these companies, B&O, Alcoa, anything oil, material related, they outperform. So now if the market starts bouncing a little bit, they sell off. They're going to find a point till they match up. And at one point, you will get a signal where they both start moving. So that is exactly what I'm waiting for. But that is the first play. Coming into the second play, Realty Trust, man. I talked about it this morning. I said, hey, if we see any lows below 410, I was like, I have to buy in the long term. It would be way too cheap. I talked about, I wanted to pick it up today, but the one thing I really noticed about it, there has been a lot of stability, and I'm telling you, keep your eye out for any of the value plays that were leading in the beginning of the year, because even if we get upside, even if we bounce, don't forget, there's a reason why people want them, and even after all of this, they just got that much stronger. So a lot of names sold, and this is what I'm saying about, if you saw it, like even at the very worst, when things were going crazy, at the very worst, they were down 2%. So in the midst of everything, I mean, I would have expected them to drop a little bit more. This is still kind of big, but there has been a certain level of stability with some of the value plays. So just keep your eye out for them. I will be eyeing them either for the long term. Maybe I'll be a sicko and buy an option. I've never purchased an option on a REIT, but I don't know, maybe first time for everything. We'll see. But that is the second play. And then coming into the final play, very similar logic. I was eyeing these. It sucks our Wells Fargo's got clapped, but I'm looking at the banks. They got a little bit more risk on the table now with things related to finances and everything going on. But just don't forget, these were the value safe havens when we started the year. I think the volatility made some people forget that. Keep your eye on them, especially as we get closer to the Fed. But I am definitely going to eye these, especially if we do get a lot of momentum tomorrow to the upside, because these still underperformed by a pretty big margin. A lot of the banks were still even down. I think Citi and Wells Fargo did manage to close red still. So watch out for that. But those are the main plays. As far as everything else, just a checkup and the other plays that we did today. But the SPY butterfly, again, today was extremely helpful. We lost 18% from yesterday. They're still up 48%. And one thing to keep in mind, today's bounce was big, but some of the puts are still up. So any of these puts from a couple weeks ago, they are still holding a premium. So understand how this makes it difficult for both sides, because now calls are getting juiced in the short term. You still got a bit of that long-term premium hanging and lingering on the puts. So just be careful with that. But essentially, remember, butterfly, we want the market to be around these levels or where we were this morning, but we wanted it to happen in a month. This was a little bit fast, so it ended up working out pretty good. But as you can see, both plays of those are still up, so keep your eyes out for those. I will definitely be looking at a couple of more of them. As far as the other plays, we made the Yandex. Remember, we brought this up yesterday and the day before. These, we bought them at $40, the $20 call. I sold them out today at like $6. I think they went as high as $7 or even like $9 at one point. It was absolutely insane. This was one of those small plays, like we said, so it was up about, again, 1,500%. Not too bad. Closed out of that. And then I was going to close some of the other put plays. You remember that Tesla? We bought this a couple days ago. It actually came back to break even, which is absolutely insane to me. But this play was up at 700 in the morning, or $800. Or no, is that 800? Oh my gosh. I was trying to take profits and it chilled out and it was at 3, and I was like, all right, I'll hold it for a little bit just in case. But that one came down, so we have till next week. But now these are getting clapped again. We'll see what happens with that. And then same thing with the Boeings. A lot of them towards the end of the day, they held up almost 100%. That last rally just brought all of the puts back to break even. The Facebooks that we did yesterday, those went from up 200% to back down negative. Thankfully, we made it free, but still holding those. They're going to give me a little bit of exposure into next week. I haven't been taking the profits as much lately simply because of a lot of the back and forth, and a lot of the moves happen, then it would chill out, and then these volatility bursts would completely clap the short term. So keep that in mind, but we get to learn from it a little bit, and I do kind of want to hold a couple of things. At least we got one big profit, so that was pretty decent. But as far as everything else, gonna be watching Baba tomorrow. Again, we're gonna see if the won continues to be a safe haven square. They killed it on their earnings. They're up 30% after today in earnings. This one is gonna be fire tomorrow. I'm definitely gonna be watching, especially if things are good. I did make a $50 or $30 lotto play on Coinbase. They did good and it seemed good, but then they did give a guidance warning for the next quarter and another trader slowdown. So we'll see how that plays out. Apple, again, it's been the safe haven. Surprisingly, today's move was massive, but it only closed up 0.6 compared to some other names. So watch them tomorrow. I definitely want to look at a lot of those premiums, but watch them. Watch Tesla. They're going to be key. Again, I have those contracts, but this was a big move, and they were to a pretty big level. I think they were closer to 600 or breaking 700 even this morning, so it was pretty wild. So watch out for that, but keep an eye on them. Airbnb, they came back up again, and what I like is that they came very low off the flush, but it's a little bit higher than last time. And again, notice the size of this up candle. I think it's one of the bigger ones that they've ever had in history. Remember, we just had one of those days, so this was very good. I'm liking it, and really all of the travel names, if things get a little bit better, those were the ones that got beaten down, so they may have the most to gain, but definitely watching them. Again, Facebook, we got that one play. This was their first real bounce. We'll see if there is a call opportunity. Again, if things do good and market wants to chill out a little bit, Facebook could end up being a big driver, so I'm definitely watching them. Arquite, they had earnings. I don't know if it was that good, but they announced a special dividend, and surprisingly, the stock didn't move that much, so thought that one was interesting. Watch out for them. Win, they went down today, travel related, but I noticed a lot of these premiums held up a little bit too good, so watch out for them. And then UNH, they had a lot of movement after the DOJ sued them over the Change Healthcare deal, so keep your eye out for them. Pretty interesting chart. Again, you could even see from the beginning of the year, this is a very key level for them, so just watch how they play out. And TLT and the dollar, it went crazy today. The correlation was somewhat positive. Again, TLT went briefly red and the market was able to go green. That was good, but we gotta wait to see what happens. And the thing that I don't like right now is that it's pretty much doing one of these hit a low and then it's starting to stall out. So we've seen this and it's not good, because essentially we really want to know if we're going to further break from here and start to set a lot of these new lows. Again, this was the last time you got a lot of bouncing instability, so we will see what happens, but the Fed will change everything in a couple of weeks, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need you to remember, don't build a castle out of mud, baby. But the code loves you. I love you. I'm gonna see you in the morning. Let's go.